Hi and welcome to my channel. For those of you new, my name is Dave and I work in financial services. And these videos are a mixture and journey towards financial freedom. They will cover financial products and financial well-being so you, like me, can reach your goals sometime in the future. Now let's get into this latest video. The latest video is about my self-invested personal pension plan from the review of January 2023. Now it's not to boast or brag or say look at me, because there's a lot more people online with a lot more substantial videos than me, but it just goes to show anyone can build a portfolio. Now for those of you new, the aim of the portfolio is an annual return of 10%. For 2023 we're looking for annual dividends of £4,500 and we're looking for a year-end value of £117,000. So quite a good month to start with, shall we say. Certainly a somewhat changed to the dismal events of 2022. Now, predominantly UK based, shall we say, but the FTSE 100 in January was up 2.8%. So what's that done with my own personal portfolio? Well, we started the month at 98,451. We finished the month at £106,737, up £8,300. A return in the month of 8.75%. So an excellent month to start with. Now during the month we made normal contributions of £200 and the government will add tax relief of £50 as a basic rate UK taxpayer. And our platform provider charges monthly fees of 13.91. So an excellent start. Let's see what happens moving forwards for the remainder of the year. Now, if you look at the following graphic, a simple overview of where our holdings are held. So, predominantly UK based. 86.27% is in UK and Europe. 11.8% is in USA and Americas. And a small percentage, 1.93%, is in Asia and emerging markets. Now, we have received one dividend during the month. We received dividend from JD Sports, a small holding, or small dividend because it's what we call a growth company. It paid us £3.25 during the month. Now, we only recovered the dividends within the shares, not funds, okay, because they're all reinvested. But across our holdings, we've got an annual yield or an average yield of 3.52%. Let's look into where our holdings or our shares are held within our portfolio. Now, these are my own personal recommendations. They're done to hopefully meet the criteria of giving us a 10% return, but it's not a get-rich-quick scheme, okay? They're all what we call buy and hold shares. We're going to hold for the next 3 to 5 years. So, with regard to our shares, we own 15 shares, 12 in profit, 3 in loss. Total share value is £87,039, makes up 81.58% of our portfolio, of which 70% is in the FTSE 100 and 11.5% is in the FTSE 250. Look at the following graphic, just an overview of our largest holdings. So our largest holding is Aviva, 4,320 shares, nearly £20,000, 18% of our portfolio. Safe, secure, steady, giving a very good yield of 7%. Bought because it does exactly what it says on the tin. Okay, safe, secure, guaranteed. Our next holding is Lloyds the Bank, 32,800. It's 86 shares. Okay, £17,500, 16% of our portfolio. And our next holding is slightly off track. Is Adrax, the biomass or the pellet maker, 1,206 shares, nearly £8,000, 7.3% of our portfolio. It is in a profit of 100%, but it has struggled recently. But a very long-term cash holding, shall we say. Our next holding has done very well also. It's given us a return of nearly 100%. It's Greggs the Bakers. We own 278 shares, £7,500, makes up 7% of our portfolio. But it is very cash rich and it did have a very good trading statement at the start of January. Now back onto the banks, we own HSBC. It was done for diversification. 1,076 shares, £6,500, 6% of our portfolio. We also own Barclays, 2,941 shares, £5,500, 5% of our portfolio. And a holding we have been increasing lately is Legal & General. We now own 1,937 shares, nearly £5,000, 4% of our portfolio. We were buying on a regular basis month on month till the end of 22, but we reached our target of £5,000. But it was done just like Aviva, safe, secure, steady, reliable, but it's given a very good yield. It was over 8%. Our next holding has been again a very good performing share, JD Sports, the retailer. 2,500 shares, £4,000, nearly 4% of our portfolio. Again, 100% in profit when we bought it, but it's very cash rich and it has done some kind of expansion plans into Europe, into America over the past 12 months. So hopefully an exciting stock moving forwards. Now, we also own Shell, the oil producer. 150 shares, £3,500, 3% of our portfolio. And we also own BP, 542 shares, £2,500, 2% of our portfolio. Oil producers have a very good run lately. Both shares are up over 30-40% over the past 12 months. Dividends increased. Okay, there is some kind of sentiment towards, shall we say, a windfall tax on the producers, but very cash-rich companies at the moment. We also own shares in Sainsbury's, £3,000, 3% of our portfolio, and some smaller companies. We own Pennon Water Group, we own AG Bar, the drinks retailer, we own AJ Bell, the platform provider, and we own Card Factory, the retailer. So a collection of, shall we say, shares, 15 shares, nearly all in profit, but all what we call long-term holds. And during the month, we've had some very good trading statements from Greggs, okay, from AG Bar, from AJ Bell and Card Factory, all cash-rich companies, all long-term buys. Moving on to the funds within the portfolio. At the moment, we own 7 funds, 5 in profit, 2 in loss. £19,645 makes up 18.42% of our portfolio. And again, they were bought mainly for diversification because we were solely UK based. And we have actually increased, or we brought a new fund within the portfolio for a specific reason, because we are solely UK based. So during the month, we've managed to purchase the Fidelity World Index, okay, £280. So moving forward, we're going to put our normal contributions. So hopefully at the end of the year, we may have £3,000 to £4,000, but it gives you diversification. Very low fees of 0.12%. It owns 1,500 shares or stocks, and it's given annual return average for the last 5 years of 10%. So it's what we call, it will just switch off. We would just buy shares, but it was done because we are solely, or we were predominantly UK based. Now, other funds we own, shall we say, we own a Legal & General Technology Fund, £6,500. Okay, again, it owns numerous funds, okay, very low fees, but it makes up 6% of our portfolio. We own UK smaller companies, £3,700, 3.5% of our portfolio. Again, it was done for diversification against growth companies in the US. Our next holding is quite selective. It's Bally Gifford Positive Change. Those about 30 to 40 shares in what we call ESG. Bought for a specific reason, okay, £3,500, 3% of our portfolio. And we own a UK equity fund. Again, very selective, 30 to 40 shares in the portfolio. All good long-term shareholdings, okay? Shall we say London Stock Exchange, Diageo, Relics, Unilever. All quality companies, all got good moats, been here hundreds of years, are going to carry on moving forwards. £2,700 in that holding, 2% of our portfolio. Now, one fund that has struggled is a global growth fund. £2,200, 2% of our portfolio. And then our smallest fund, okay, until recently, was a UK smaller companies fund. We did put £1,000 in. has struggled during 2022. It's now worth £745, but thankfully it makes up 0.07% of our portfolio. But it was done ideally away from, shall we say, the FTSE 100 to give us greater growth, but it's not proved that in a short term. But we will hopefully ride out the storm. It will recover over the next months, next few years. So a quick overview, shall we say, 7 holdings, 5 in profit, 2 in loss, all what we're going to call buy for the next 3 to 5 years, and we are going to top up our new holding of the Fidelity World Index, as we say, to give us diversification, but to give us, shall we say, something we can just switch off. So, as we said, it's not a get-rich-quick scheme, okay? We've had a very good month, 8.75%. Who knows what will happen February, March, okay? Who knows what will happen to the UK economy? The so-called interest rates will go up. It may be very well good for our banking or sectors, but what about the wider economy? Remember, these are my own personal opinions, okay? It's not a get-rich-quick scheme, but it proves if I can build a portfolio, you can build a portfolio. Okay, remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again soon.